Right, yeah. This is not the season to be talking about your life savings in crypto.
Yeah, yeah. Been a bit of
Um,
a rough, few months in crypto, especially these last few weeks.
yep, that's right. And that's exactly the topic of our conversation today is how do we stay safe in DeFi going to the future? Um, and I guess, let's just jump right at it. So, Jeff, can you tell us what the heck happened with FTX? Why can I not withdraw my life savings from the exchange?
Well, technically, what happened, according to the financial records that are disclosed, is that Alameda received deposits for on behalf of into their bank account of fiat dollars on behalf of FTX customers, and FTX credited their accounts so that they could purchase things on FTX. But instead of transferring the funds over to FTX, they spent them.
Mm,
Now, this is always has the potential to happen when you have a link between fiat and digital assets, and there needs to be an organization that receives your deposits in fiat needs to have some way of independently auditing and verifying the holdings that they have, similar to what you'll see that Coin does with USDC. Well, Circle does with USDC. They have an independent oversight into ensuring the quality of the collateral that they hold in relation to cash equivalents for USDC, and that didn't happen with FTX. So and in the rare occurrence that a big company actually takes your money and then just spends it on their own spending, or lends it to other people, or uses it to improve the performance of their own assets,
mm-hmm.
you suddenly have a situation where there's no money for you to withdraw if you actually want to go back the other way from digital assets to the dollars that you spent. It's more exasperated in a time where things are down from their peaks, because in every sort of market that has a lot more supply than demand, which I would say crypto has a lot more supply than demand. In those markets where there's a lot more supply than demand, when the price peaks and drops, people are more likely to buy in when they see momentum and people are more likely to exit when they see lack of momentum. And so at a time like this where people were down from their peak, so maybe they had bought Ethereum at $4,000 and then they were trying to get some money out, and at $1,500, it's actually at those times it could have been quite a shock that the money wasn't there for them to do that, considering they put so much in. So that's simply what happened. Alameda received money on behalf of customers depositing into FTX, and they spent it rather than kept it in reserve.
And what is that a failure of, do you think? Is it all centralized organizations at risk of doing this?
Yes, absolutely. Whenever you give someone your money, you expect them to manage it, and that's their legal responsibility. And that's whether they report clearly or openly or transparently, of what they do with your funds, they should actually be under certain regulations and under certain licenses and approvals for what they're doing, which means that it's not our job to police them. It's actually the authorities and the jurisdictions that they're in. So, for example, in New Zealand, if I started a financial service company where I accepted customers' deposits in exchange for an investment in a fund, I would need to provide a certain amount of reporting about how much funds I'd received and the management and receipts of those funds and how they're spent. But one thing that's absolutely illegal in pretty much every jurisdiction is that if you're offering an investment service, you're not actually, if you're a service provider, you're not actually able to participate in that service, which is where the temptation really hit for these big centralized exchange or centralized DeFi or centralized funding or areas. They participated, and it became, even without the temptation of using customers' funds, participating means that you're potentially playing against your customers, except you're in a position where you know more or have more control, and that's where regulated and unregulated service providers sort of hit. Now, I'm not a proponent for regulated service providers. I think that self-regulation is really what we should expect of ourselves as decent human beings. We should be able to provide proof that we're doing what we say we're doing. And for example, when a major exchange reports their earnings for a year in their latest prospectus, when I add up that if their earnings are higher than the potential fees from trading on their exchange that they've gathered, I know that they've made money by trading against their own customers, and that's evidence of that. You can never see the actual record of it happening, but you know that something has happened in that situation, and you're aware. Okay, so people are doing these things in this industry, and whenever there's sort of a veil that you can't see clearly, they're taking advantage of their own community, which is something that if you have self-regulation, which means trust but verify, so they publish things so that you can verify what they're doing, so that you know that they're not hiding something in the background or stacking the cards against you.
So just touching on that, I kind of want to loop in Binance, since they've recently come out afterwards to publish their proof of reserves, and as well as Coinbase, who are a registered public entity. So what's your take on those kind of centralized exchanges offering cryptocurrencies and trading?
So I think it's good self-regulation to publish the crypto or the digital reserves that they have. I think that using a third party that they pay to do it is, I think those third parties need to have some time to gain trust. So that's one of the things that I would recommend is, it's great that those third parties are validating that these exchanges own those wallets that contain those assets. But I think those organizations that are providing those independent reports, maybe over time it would be good for them to gain more trust and gain more status and reputation. And that's something that continuous self-regulation will develop. But one thing you can't see is the black hole of how many assets are actually existing within the balance on the exchange. Another thing that you can't verify is what leverage is held against those assets in other markets and other things, other investments. And don't get me wrong, I think Binance should support projects, but they should be very, very open, or Binance or any other company that's providing a financial service or a trading service should be very open with the money, where the money came from that they invested into something and where their investment lays, so that sort of public reporting and official reporting of what they're invested in, like a disclosure statement or a if they're investing in things that they're not declaring, and they're not declaring how much they're invested and what the nature of their investment is and where the money came from, that's a reporting standard that we expect from any financial service company today. And if they're providing a financial service to retail investors, they should be meeting that sort of minimum standard and holding themselves to that minimum standard of providing that disclosure.
Right. And I guess, what is the good news in all of this? What kind of role can Otto play in maybe number one, stopping these centralized exchanges from trading against their users' positions, and then two, making sure that those reserves are actually there for users to withdraw from?
Okay, so one thing with that we're trying to develop with Otto is a responsible community of investors and funds, so that there is DeFi doesn't become clouded by these malicious code, by leveraged or over, like, not knowing how leveraged Bitcoin is or not knowing how leveraged Ethereum is creates a huge amount of risk to someone who's actually wanting to look at supporting genuine finance and genuine returns on their investment, because the underlying capital that you're using to invest is actually insecure. Like, you don't actually know how leveraged the underlying capital is, so it's at high risk. So when you have a high risk of underlying capital, you have a really high risk of you need a really high return to justify that high risk. Right. So if we can reduce the risk, or the risk of leverage, or the obscurity of leverage, then we can have a better idea and accept a more reasonable return, because the underlying investment is more secure. So one thing that Otto does is it actually doesn't have a black hole on the other side. So one of the key values of doing this all on chain is that your funds go into a cold wallet that's publicly validated and verified, and then those funds go from your cold wallet onto Otto, which is the you could imagine it as the exchange. And your Otto balance and everyone else's Otto balance can all be added up. From anyone publicly can see the total balances and see one-to-one the underlying assets that are supporting that. So that stops any obscurity of what are they doing with my underlying assets, because you have the evidence that the underlying assets are there. in exact one-to-one relation to all the other assets that exist, all the assets that exist on Otto Chain being traded at the time. So you know that right down to the very last Ethereum or ADA or USDC, if everyone withdraws, there will be enough there for everyone to withdraw. So that means that all your funds on the exchange and any projects launched on the exchange, there is no they can only exist in a one-to-one relationship with the underlying assets that have been there. And because we don't do fiat onboarding and offboarding, there's no bridge between something you can't verify on chain. Everything is verifiable on chain and viewable publicly, even though you obviously still anonymity of your hashed public address. The total balances are verifiable at all times. So that's one way that we are able to offer that self-regulation or that trust but verify scenario to users. Another way is independent management of the custody service for depositing. So the cold custody service actually being independently managed and independently overseen by a company that doesn't participate in the event. And so that gives you that sort of.
And I would just like to add to that.
Awesome.
I would just like to add to that. Sorry, what you just mentioned was also one of the major failures of FTX. Just for our viewers that are listening in, failure of corporate controls. But yes.
Yeah. So in our scenario, we have a very highly respected, independent auditors and a registered and regulated firm which is responsible for reporting that manages the cold custody system, rather than an obscure unknown entity that's not publicized, which means that no one who is involved in the operating of the blockchain or the maintenance of the blockchain or the DAO on the blockchain has actually control over the underlying assets that sit underneath it, which gives you a span of control that protects against a lot of potential fraud and mistakes.
Cool. So I guess we have the separate management of the assets. People who are not involved with the production of the blockchain are helping us with the custody. And then we also have the self-reporting part where people can actually go and see exactly where their coins, their digital assets are being held in which cold wallets. But I guess my question is then, since we have this information that is out, whose responsibility is it to actually audit which assets are where? Is that the responsibility of like the users to go and check?
So we're building a verify dashboard, and we will work with Chainlink and any other partners that we possibly can to make sure that the oracles that we're using to present data are there and available, so that people can monitor those things. And obviously that blockchain is public, but not everyone's got the ability to do data analytics and checks. So those are things. One other thing, so for us, like one of the key things that we believe is that people should be free to do what they will with their money. But service providers should be holden to be honest with the service that they have. So for any service provider to launch on Otto, they have to go through a KYB, AML and CFT process for their business to actually submit a product. And then the code of their product has to be independently audited to ensure that it's safe, that it works the way it says it does, and then an independent report of that. And before their project can launch on Otto, all of those things need to be supplied. They can still be anonymous to the public, but they have to have evidence of their passing KYC, KYB, CFT, AML, to actually get to that point of the community voting whether that product should exist. And your Otto tokens will be used to vote which products are allowed to launch and which ones are not. So the community actually has the ability to check the process has been followed, and that the company who's submitting the service has complied, and that the audit does what it says it would do. And there's a bunch of other information in the application. So you'll understand a service or a DeFi service when it's launched, and you'll have all the information about it before you get to vote whether it can exist on the chain. So that step, that self-regulation, but also brings in community regulation. So Otto community has the power to decide whether something's passed the process or not. So it doesn't even get to vote unless it's gone through the process for applying, and then once it's at the process for applying. So you have a lot more security in the fact that code is not published on Otto, but DeFi products are not published on Otto without going through that process. And it makes it, I think it makes a better place to put for normal people and fund managers and investors to put their funds into DeFi rather than out in a more open blockchain. Open blockchains have great utility, and individuals have great freedom, and I love that. But for financial service providers, I think self-regulation is not a high bar to hold yourself to if you're an honest provider.
And I think this ties into what you said earlier about fostering a responsible community, in that we can provide all of the data in a simple way as possible, but it's still up to our community to kind of audit that data, have a look at the dashboard, look at the projects that want to launch on Otto, and then vote on them.
Yep. That's right.
I guess before we wrap up this particular topic, I always like to ask this question: what do you think are the drawbacks to the way that Otto is going to tackle this issue? Is it the time that it takes to build and code the solution? Is it the material and the education that you have to give to the community to raise that skill level in Web3 and DeFi? What's your opinion on that?
I think that the drawback is that it's going to take longer to build a big community of investors who are confident and engaging on Otto blockchain, because there are a lot of opportunities out in the crypto world that look very attractive, and it takes time to and it is a big choice. I work with a number of crypto investors, and many of them invest early stage, and that funds and family offices and reasonable sized organizations. They invest early stage in crypto companies, and in kind of a scattergun approach, because some of them will succeed, some of them won't. But when you're looking at return on a financial service, and getting a reasonable return and using the blockchain and things like that, we have to be competitive, and and obviously we don't have the liquidity issues that other small chains have, because the liquidity is actually external to Otto. So all the layer one assets are bought in by the customers. So if you don't have liquidity for your asset on Otto, you can easily offboard it and have liquidity wherever else that liquidity exists. But from a participation perspective, we need to grow. It needs to grow its reputation. It needs to grow its value and become a part of those portfolios rather than a scattergun approach. A more trusted, proven, consistent way to use digital assets in DeFi. And there's a number of products that we believe have a lot of potential to do that, and we're looking forward to launching those and supporting them.
Well, it's good to hear. And Jeff, do you have any other points you want to bring up before we move on to our community questions?
Nope. Other than crypto is very early stages, and I'd say to everyone out there who's investing is to think carefully and invest a small amount to ask questions and be part of things, and don't expect these digital assets to get it right first time, but I think that they're going to get more right over time as things continue to move forward. So just be careful, watch carefully, and get involved in what you believe in, but do it conservatively.
Great. And speaking of questions, our first one from Discord is from Buckley Gary. So previously, Jeff mentioned Otto Blockchain would be a shard of the root network. How does that affect the security of the Otto Blockchain?
Well, there's only one way on and off Otto, which is amazing. But bridging other blockchains is an amazing way to do that. So because Otto can bridge to other blockchains, it can be an off-ramp. So you can on-ramp into Otto through custody and off-ramp onto root through your Otto account. So one of the big benefits of being a shard, though, is that your identity or your identity attestation or the assets that you own, the core identity service within Root Network will actually integrate with your profile, which is an amazing position to be in, because it's like your profile doesn't have to be duplicated, but it still stays anonymous.
And how those bridges that you've mentioned, how is that different to the bridge vulnerabilities that we've seen this past year with the hacks on the different blockchains?
Once it's okay, so it's not a smart contract bridge, if you get what I mean. So Otto is not a smart contract bridge company, but Root will have smart contract bridges and an underlying XRP ledger for liquidity management. So your assets on Otto are not bridged as such through a smart contract to Root network. But your identity is. So if you're doing something on the Root network, you can quite happily use your assets on Otto to pay another wallet on Otto for a service you're consuming on Root. And that the funds don't leave Otto, but they go between two identities that are both registered on Root network.
Oh, I see. It's quite an interesting way to do things.
So you can use your Otto wallet to sign a transaction, to transfer between two people. So, for example, if I was buying say I wanted to buy a Next Legends boxer from you, and your Next Legends boxer exists on the Root network, and I have an account on the Root network, and you also have an account on Otto, I can buy it on the Root network, but the funds will transfer between my Otto address and your Otto address.
I see. The funds never leave the Otto blockchain to go to the Futureverse, to the Root network.
But the permissions.
Great.
The permissions traverse.
The permissions do.
Yeah.
It's very innovative, and I believe that answered that user's questions and more. Our next question is from Marklar. Are we working on any integrations with data backpack providers? And how are we thinking about privacy shields in regards to KYC credentials alongside other chain-based information?
Yeah. So we're not connecting the KYC data to chain data. It's one of the principles of our design. Which means that if someone asks us to provide KYC data on chain, we cannot. So that's one of the principles that we have, because we don't think that the important thing for us is that the people who are depositing and withdrawing from Otto blockchain are verified by our that we can guarantee to our custody provider and oversight and the auditing services that the people that are participating by depositing their funds in are all KYC, AML, CFT verified. And that's so important to protect the people inside Otto. And anyone withdrawing is also KFC, AML, CFT verified. So it's just kind of like the gateway that we manage, not the inside. But the attestation service that we provide you on multi-chain, so including on the Ethereum side, the attestation service says this person has a valid Otto account. So therefore you know that account actually belongs to a real person who's been live verified through our system. So it gives applications on all chains an ability to associate a certain level of rich metadata, chain-rich metadata to that person and interact with a number of cross-chain protocols, which we've probably released a few information about that, but there's a lot more to come. But that's a way that we say anyone that's been able to generate this attestation to their account, and we're able to verify that the account, that it's valid, and you are able to view that within the NFT itself and see clearly that this attestation of this person is completely anonymous. It has no data about the person. It's not linked in any way to the KYC file that they have, but it's impossible for them to create unless they have already gone through that process and that they own that account that it's in. If anyone stole one of those, it would no longer be valid. It's very easy to see that it's no longer valid. So that sort of ability gives us a knowledge about someone being KYC, AML, CFT verified on Otto, but without disclosing who they are or how much money they have or anything like that. So it gives us a sort of some very rich data which can't be a honeypot in any way.
So the next question, we're quite lucky to have a patient and trusting community who know that building great products will take time. But is there any updates that you can share? Any information about potential launch? Any progress updates?
Yep.
For the community.
Have you received recently some screenshots and stuff to share, Jafar?
Yep. We shared some design screenshots last week of the dashboard.
So our front-end team was working really hard on the Catalyst minting process, because that's going to be the first interaction that you have as a public user on Otto Blockchain. And we think that consensus and decentralization taking place is the most important thing we can do before allowing assets to come on board. The team are very close to that, so we're pushing. I believe they're looking at like the last week in November or early December for actual public launch of that, which we're very excited about. Does that answer your question, Jafar?
Sorry, I had myself muted. So it does answer my question. And then the last two next questions before we wrap up today. So we've already answered these last two in the last podcast that we have, but just in the interest of transparency and communication, just the question is there any further elaboration on the partners that'll be launching applications on Otto? And then number two, other than the Otto plug tokens on the network, is there an indication of how much liquidity is going to be committed to seeding on mainnet launch?
We have a number of DeFi developers that we have relationships with that we would like to launch their products on Otto Blockchain. We have a number of products ready to launch already, which are in development, but those other DeFi applications, we don't want to pre-approve. We want the community to vote on. And so we're going to take them through and lead them through, and we've got funding set aside to do that, to lead them through the process of coming on board with us and the community voting on them to bring them in to Otto. So I can't announce those other than you look at the sort of partners that we work with and the people connected to the relationships we've built over the past 6 years, and you'll get a good idea of like the companies that we'll be working with. there is one really important partner to us that we think is going to really open some doors, and that we're not shy to announce that we'll be very closely working with, and that's Moonstake. And we think that Moonstake and Otto will, the products that Moonstake can offer and the utility that they can offer to the tokens that they support, using Otto is going to be very, very, very exciting for the whole DeFi world and for the whole DeFi ecosystem across all across the globe. So that's one. The other ones that are kind of obvious that we really want to work with is the Barnbridge protocols. They're excellent financial software, and they work really well in for funds and investors looking for reasonable returns, or community funded hedging of their assets. And they're all completely protocol driven and not manipulated or or backed by some kind of artificial inflation. So they're really good protocols. So looking at those areas, we think that they'll be very successful on Otto. There are a number of other DeFi developers out there who we have some relationships with, but I can't sort of talk to that yet.
Mm-hmm. Well, it's great to hear that right from the get-go, our community is going to have that vote and that decision to make onto which products will launch on Otto. But with that, it is 1:45 p.m. now. Our podcast time is over. So I'd like to thank you, Jeff, and I'd like to thank everyone who turned up and the people throwing questions in Discord. We have the Otto conversation every 2 weeks. So the next one coming up 2 weeks later, and then we'll have the Twitter recording up very shortly.
I just wanted to say on the liquidity question, a lot of people ask how much liquidity is going to be committed to Otto from day one. And I just want to answer really honestly, no matter the size of the fund that we're talking to, and no matter how much they respect us and support us, none of them are going to put all of their eggs in one basket on the day one. So we're going to have to grow by reputation and performance. And we're committed to doing that, because we believe what we're doing is actually a much bigger picture in what DeFi will become in the future.
That's right. Just putting our heads down and working. All right. Thank you, everyone. We'll see you in 2 weeks.
Thank you, guys. Appreciate you turning up.
Thanks very much for watching. If you enjoy this content, smash that like button, hit subscribe, and maybe consider watching one of my other videos. Bunnies up!